Welcome to our Finance Speaks quarterly update on the markets and your accounts. For those who aren't clients of ours, I'm Kyle Sadler, president of Precept Wealth Management and best-selling author of I'm Retired, Now What? Economic updates. They are never easy to deliver and even moreover, not the most entertaining to listen to. Trust me when I say most economists do sound like Ben Stein when they speak. Hopefully, just hopefully, today I have spiced up this report for you to be able to understand, but most importantly, stay awake for the next 5 minutes. Well, back on January 1st, I sent out our quarterly update imploring everyone to just hang in there. As I forged through the negative yearly returns and client emotions, I continued to encourage everyone because the U.S. equity market was relaying signs for a possible surging comeback. My request was for everyone to focus with me on past historical data for years subsequent negative return years. Because of our positive and dedicated mindset to long-term goals, since the recording of that update, we have shared in the growth of the S&P 500, which has posted about a 15.8% rate of return year to date. Here's the big question. How much longer? Now, I'm not going to sugarcoat anything, and for my clients, all know that I am as transparent as fine china. But wait, before I go any further, I don't want anyone to feel panicked or needing to make immediate corrective actions, but I want to share what I'm seeing in the market data. We have celebrated a 10-year bull market for the past 10 years, and actually a recession occurs every 7 to 10 years historically. Are we due for a recession? How much longer will this bull market last? My first place to turn to is the Business Cycle Index, the BCI model, which uses a range of economic and financial information to estimate the strength of the U.S. economy and to forecast the probability of recessions. Currently, it tells us that for the short-term risk, a recession is still low. But the BCI model further estimates that the probability of a recession in the next 12 months is around 30%, right at the top of the warning threshold for leaning out of risky investments. Again, this is nothing to panic about, just something to take into consideration as we plan investments and current purchases and sales. Next is the second place that I turn to for understanding the relativity of growth, and that is the Federal Reserve's monetary policy. If the Fed fears that the market is overheating, then an action on their behalf of placing a restrictive monetary policy could tighten financial conditions. With this action, there is an unintentional possibility of raising that BCI recession risk. A condition that we reference a lot in the industry would be that an inverted yield is created. Because of the potential Fed action and the elevated 12-month recession risk that reflects the late cycle balancing act, there is less room for error. So, Kyle, what does this mean to me? It's a challenging environment for managing portfolios. The best response is to focus on the 4 essential aspects of portfolio management: diversification, implementation, decision-making process, and the ongoing monitoring of the portfolio. We believe investors need to maintain exposure to a wide range of return sources to have effective dynamic portfolios that lean out of unnecessary risk. The challenge is to make the most of late cycle returns while preparing for potential downturns. It means relying on a structured and disciplined process. So with this said, I'm not jumping immediately on the phone to make moves because, heck, we still have what I stated in January, a great market growth cycle to continue on. However, as we approach 2020, I may be contacting a lot of you with potential strategy changes in the event that a pattern continues to form and could potentially affect your portfolio. For our clients entrusting us with their economic well-being, I thank you very much for your continued confidence. Oh, and if your friends are feeling that their wealth manager is not speaking to them about these topics and feel that they may not be positioned with their best interests first, please feel free to share our contact information, because this is how finance speaks. I'm Kyle Sadler, headed out until next time. Have a blessed and awe-inspiring day.